morning, class. My name is Martha Kamkotange. Welcome to accounting class, grade 10. Let's recap on what we did last week. Our previous topic was double entry system, whereby today we are not going into details about it because I'm still marking your test that you guys wrote, and then I put in a request that we will meet this afternoon when I'm done marking to do the revision. So far, 75% learner pass. Okay, it's a good news. Okay, so our topic for today is book of original entry. Before I go into details, I have prepared notes for you guys and a homework as well. Here as is follow. Here, take, give to others behind. Okay. At the end of this period, we must be able to know what is a book of first entry, list the type of a book first entry, explain the advantage or the benefits to the business of using book entries, know the use of documents, number in recording transactions, explain the use of documents in a book of first entry, understand what is VIT, define VIT, and distinguish between input VIT and output VIT. Take your books also and make some notes, okay? What is a book of original entry? I'm now asking you, students. Do you have an idea what is it all about? They're accounting terms, of course. Okay, well, book of original entry is when a businessman starts their company. When you are a businessman, you start your company and then you have to record your transactions in a book of entry. Whatever you do with the company money, you record it. Whatever you do, you record it. Okay? That means when a businessman starts their company, one of the primary things they do is keep track of their everyday transactions. That's what I have explained. In addition to that, book of original entry are nothing but accounting books or journals. What is a journal? In a simplest way, it's a book, just a book to record. Okay. All business transactions, their details and description are first recorded in the book of original entries. This concept only applies to manual keeping, record keeping. When the business, nowadays now, those years, back then, our grandmother, they used to record manually. You understand? Having a book, writing every transaction. You write. But nowadays, people use computers. Technology is everywhere. That's what we do in businesses also, or companies. A computerized accounting system no longer makes references to any of accounting journals. Instead of recording all business transactions in a central database, that they use databases to record with computers nowadays, which is more safe and easy. You understand? Technology, very important. Okay, the type of book of original entry. In our lesson objectives, we should know the types. They are as follows. There's a general journal, there's a special journal, there's a sale journal, purchases journal, return inward journal, return outward journal, and a cash book. These words are familiar, of course. We use them in all accountings. They are accounting terms, but I have given you notes. You can read with time and you understand them better. But the format to use both of the journals is just the same. And out of these 7 journals, I have selected one, which is a sale journal. I have provided in your notes also. I'm going to show you a format of a sale journal. My handwriting, I'm supposed to be a doctor. Okay. So, the format, I have said that the formats are just the same. We should have a date, the details, what happened, invoice number, and the amount. And then the total. Okay. The example that we have there is MK investment for the month of June 2019. MK's investment, don't forget, you see, don't forget the name of the business or company. So here it's MK investment. Okay. June 2019. So the date, June, just write June here. The 1st of June, sold good to success on a credit of 200, invoice 0114, meaning success is the details, name of a person, and then invoice number, and then the amount. Okay? The 2nd June, Janet sold the following debts on credit, 400. Same invoice, 400. The same day, that 2nd of June, Shura, same invoice, sold the following stuff on the debts on credit, 300. And then success, Janet, 600. 10th of June, success, 500. And 10th of June again, Betty, sold good to the following on credit, which is 450. The totals, now you add this together and then you write the totals here. Do you understand? I have given examples and I'll explain into details the next topic, because today is just introduction. It looks easy when you understand it. So the format is that you write the name of the company, which is MK Investment, and then you must always record the date. You must put the details or the name of the person that took these things, and then the invoice number, you list it, and the amount. The amount is very important with the date also. And the total, you put it down there. Okay. The advantage of this is that of recording is that it saves labor hours, meaning recording in a subsidiary book saves a lot of time. It's division of work, whereby at work you tell the other person to record this and that without making mistakes, because it's straightforward. It's specialized of work, easy for references, whereby if an auditor happen to come to a certain company like in MK Investment, the auditor can easily read what is there. Like the first day or the 1st of June, what happened? Who was the person? The invoice number, the amount the person took. You understand? And easy for checking. If the trial balance does not match, it will be much easy to locate the error to the book. For instance, if an auditor happen to come and happen to find errors or mistake, we can always go back to our file and then rectify the mistake. Okay. In our learning objective, we mentioned also that we should know what is VAT. What is that? We normally see that when you normally go and buy things in the shop, we like buying. And then it's always down to there that a VAT added, but we don't know what is it. So today we must know what is VAT. It's value added tax. Is placed on a product whenever a value is added at each stage of the supply chain, from a product to the point of sales. The amount of VAT that the user pay is on the cost of product, less n of the cost of material used in the product that have already been taxed. How a value-added tax works. Let me give an example. Janet have a candy company and sold in the country of Namibia. Namibia has a 10% value-added tax. Here is how a VAT works. Janet's company buys the raw material for $2 plus a VAT of 20 cents payable to the government of Namibia for a total price of $2.20. We will now look at this deep, the next period. How to calculate the VAT and so forth. The advantage and disadvantage of value-added tax. Let's now talk about the pros first. Substituting a VAT from other tax will close the tax loopholes. A VAT provides a stronger incentive to earn more money than a progressive income tax does. The disadvantage is that a VAT creates high costs for business. It encourages tax evasion. It conflicts with the ability of state and local government to set their own sales tax level. You understand? It press along cost lead to high price. Okay. There is input VAT and output VAT. We will understand this term the next period when we are going to talk more about how it works. Due to time, make a bit of research for now of input and output, and then when we are going to meet, at least you are familiar with the terms. Conclusion. Subsidiary ledger provide a company details record of specific items that are included in the balance of a ledger, general ledger controlling accountings. I have mentioned about the different types of journal, such as a general journal, sale journal, the one that we made an example, and there are 7. Yes. We spoke about the pros of keeping a record is that it saves hours and division of work, and it's easy for checking. Any questions, student?
Yes.
Yes, Maria?
If I remember well, Miss, you mentioned the importance of keeping records, right?
Yes.
What will happen if a company does not keep records?
Wow, that's a very good question. Thank you so much, Maria. The question was, what happened when the company does not keep records? That's your question, okay? If the company does not keep records, the company will not know whether it's losing or it's making profit. You understand? Into detail is saying every business needs to keep detailed record in order to maintain normal and efficiently operation. Quality records manager ensure that a business can keep up with the growth of a business. That's what I said. For you to see whether the business is growing or losing, you have to have details. And that's what we call recording. Okay, lastly, in a growing business, change is inevitable over time. Business need to be able to function. Poor recording management can lead to damaged business relationship and delay in virtual every department in the company from day-to-day operation in accounting and human resources. So meaning record keeping in a business is very, very important. I've given you guys the homework, and it's read as follows. Define book of first entry, list the type of book of first entry, mention 5 advantages of a book entry, distinguish between input VIT and output VIT. Total marks is 20 marks. Thank you so much. See you in the afternoon because we are still going to do the revision and I'll bring your test. Good. Have a good day. Thank you.